come that time where we are going to have our Trader Talk segment, and today we're going to focus on with Brett Manning, a.k.a. Chart Trader. Good morning, Brett.
Good morning, Jim.
So, you were up in the wee hours of the night slanging around some Bitcoin, and the first question comes from a listener who asks, do you ever sleep?
It depends. I sleep when there isn't that much interesting happening in markets, and then I don't sleep when there is.
Gotcha. So I just so happen to have a Bitcoin chart, a Bitcoin futures chart, no less. And I want you to kind of walk us through what you were seeing, why you felt compelled to stay up all night to trade this Bitcoin. I believe it's currently in your favor so far.
Barely, yeah. And probably about not to be. So.
Yeah, it got close, but you can see this big spike in this chart. So I'm looking at a daily chart right now. Is that the best? Okay. Is that the best one to focus on, or should we look at a longer time frame?
It's the same thing on any time frame. It's a parabolic advance, and you can look at the hourly chart. It's going to look similar in terms of, you can see the rounded curve to the move and this sort of stacking ladders that become increasingly vertical. And we've gotten above the real level to get above, which was around the 12,000 level. That's where you had a bunch of highs back in early 2018. That was a primary resistance level. We blew through that and overshot it in really just an extremely vertical part of a parabolic curve. And it really does remind me quite a bit of the Nikkei back in May 2013. And I mentioned that last night. You get to a certain point in a move like this where there is a big air pocket below it when finally it stalls, like an airplane that's going into a parabolic climb. And when it stalls, it's just going to be straight down for a period. Not forever. Probably pull back, I would imagine, to 10,000. It will probably be shockingly fast when it gets started. But, the thing about a parabolic move like this is you really could be way off about where its upper extreme is going to be, because everything deals with chart scaling. And if you just go ahead and pull down on the price axis, you can temper what it looks like now and imagine a vertical move to 25,000 as the next step. It can go more vertical, and each one is a kind of exponential addition to the move, right, until it runs out of the fuel, and the fuel is, I would say, panic buying. I think that's what we're seeing now. I don't think that this is CTAs doing momentum trend following systems. I think that this is, from what I understand, the vast majority of money that is pushing into Bitcoin right now is not coming from US dollars, it's coming from Tether. So it's people who had moved their crypto resources into something that is as close to cash as you can get without putting it back into a fiat currency. I think there's a big store of that sidelined crypto money, and Tether's the place to put it. And then it goes back into something like this, and I really think that it is people who are, there's a lot of true believers. There's people who think that Bitcoin is going to be a new monetary system, and they just couldn't take the pain in that bear market. And now it's just triggering all of that back in, because what if the next move is 25,000? What if you're still on the sidelines waiting for a pullback and the next move is 40,000? When are you ever going to be able to get back in? Yet you've lived for the last 10 years dreaming about this moment. You can't be left behind. That's a panic buy. You can't. It's painful, but you have to buy if it just keeps going higher. I think that we are exhausting the supply of people who feel that way. And at some point we're going to exhaust the supply of people who feel that way to an extent that they're willing to buy into, the vertical part of a parabolic move. And when we do, that'll be that. So we got above that, and not that forever. Again, I don't know where this is going 6 months, a year from now. But just like the Nikkei, that was a short that I did catch. It was truly one of the best trades that I've ever had. And were you with us then? I think you were. But I don't think, we didn't have Trader Audio.
When's that?
May 2013.
No, we didn't have Trader Audio, no.
No, I know we didn't, but were you...
Yeah, I was with you guys, yeah.
Yeah, right. Do you remember that Nikkei short?
Of course, yeah, I was covering it for you. You and I I was on the overnight desk.
Yeah, I thought so.
Yep.
Yeah, right, yeah. And that was, I think that was a similar kind of, if you just abstract out just the psychology of market patterns, I think that there was a somewhat similar situation without as much desperate FOMO feel to it, but a similar behavioral context for a market. And when it went incredibly quickly. I think it was a couple thousand points to the downside in a few days. And I think this is kind of similar. I think that you see that, and it's just proportional as a correction, and then you start to move and consolidate, and then eventually you set up a new base if this is theoretically the beginning of a continued ascent for Bitcoin. But yeah, I mean, I think that when it does shift, it's going to shift dramatically and powerfully for several days. And this is really just more of an experiment. I've never traded this market. So I just recognize those characteristics, and I believe that I understand enough about kind of the tape composition model view of it, just based on the sense of where the money's coming from, to take a shot. And I know the slippage is going to be really bad. I tried to warn people last night. If this doesn't work, I mean, I know that I'm risking somewhere between $1,000 and $3,000. I don't know what it's going to be. I don't think it's going to be worse than that, but I mean, this could skip through a significant set of levels before it fills an order on that stop. So I really want to make sure that anybody participating in this knows that, this needs to be something that's excessively small, because this market, the Bitcoin futures market, just is so thin. And especially when you're, undergoing a market dynamic like this, then, the upside could be really, really just leapfrogging over levels. So, caution.
And that leads me to my next question: is how closely does the futures correlate to the Bitcoin movement? I don't know, the Bitcoin
perfectly
market. Okay, so do you think that there's any chance that the futures could get completely out of line and then have it come roaring right back in, just based on algorithm orders that will have to fill the order book and say, whoa, this is way too extreme, and it might even be for just a matter of seconds where it gets crazy? Like, for instance, what we saw several years ago, maybe 10 years ago, when crude oil was trading, do you remember when it was trading like in the 150s, and there was
147 something?
Yep, 147,
yeah,
exactly.
I remember that. Oh, yes.
Yep, it was 147, but it just
summer 08.
Yep, and it just moved just crazy after hours, and just because there was no liquidity there, and you could potentially see a move like that in Bitcoin. So I was just curious if that's kind of what you meant as far as that risk and having it just flip out of whack.
Well, I think it could happen. It doesn't have to be divergent. I mean, I think that if you're in a parabolic move, doesn't matter which instrument you're in.
Fat finger that just goes nuts.
It doesn't even need a fat finger. It's just the next. Think about this: a parabolic move is by definition one where each next, let's say, it's like a ratcheting up of extremeness. With each higher high is a more vertical panic, until it's done, and then it's done. And it's not going to moderate. The next leg higher is going to be much steeper than what we saw last night, if there is one, right? I mean, last night was insane. I mean, it moved up, pretty much a couple thousand over the last 48 hours. If you look at an hourly chart of what you're looking at, you see just a turn around the corner of or past the shoulder of an exponential curve over the last couple of weeks generally, and increasingly with each time it moves to a new high. It's a new high that happens with an intensification of the verticality of that move. And the next one, in theory, would be a further intensification of that. And if that's the case, then it's gonna skip levels. I mean, it's gonna be in such a panic to the upside. It's literally an upward crash at that point. And I would think that with the futures market, even if it's perfectly tracking, it's thin enough that you don't know where you're actually getting filled. So, that's why there's I'm sure plenty of people in the service where, I would say it's not okay for you to be in this trade. If you are finding a way to do it on a crypto exchange with much more liquidity in the market, I think that there's ways to do that now. That's different. But it's the illiquidity of the Bitcoin futures market at this point, not necessarily a divergence from the underlying, but that it may track it with gaps, where there's orders being filled at a much greater degree of granularity in the underlying, like BTC USD market, but the futures just simply has 30 seconds where there's no orders filled, and then the next order filled is way above. And, hopefully you're filled in that. So that's the risk here, and that's why I kept it so small. But again, when that process is over, I think that this is going to have a relatively very rapid move back to 10,000, and then we'll see from there. Or it's maybe 10,400. I think that you're going to take that latest leg away, and I really do think it's going to be quick.
All right. I don't think I've ever asked you this question because it really hasn't been all that relevant in the time frame that Trader Audio's been here, but you're a pretty pragmatic guy, and you said that there are some true believers in Bitcoin. What's your overall assessment? Is it going to be a real thing?
Something's going to be a real thing. I don't know if it's Bitcoin. I just think it's a long process, and I think that it's not going to be there. There's this. I think that the idea that you're going to do that with something that doesn't in any way include any sort of relationship with traditional monetary systems, and just kind of completely as a revolution outside that nobody can control, and it eventually displaces everything and becomes the new standard. I think that that's probably naive to think that there's that little control when you have essentially every major bank and every major government on the planet would be against that. Mm-hmm. And I think that I just don't think that that's going to happen that way. But I think that there probably over a long sweep of history that there's advantages to it. So it's a deflationary force. It's a disintermediation, unquestionably. And there's lots of things like that in this world. And as each version of a deflationary shift and a disintermediation happens, it tends to be kind of like a managed set of compromises that we digest more slowly. And I would imagine that there's probably a way to, because it does provide value to instantly transact without having to go through a lot of red tape, and it's virtual. And if it does truly prove to be perfectly secure at the same time, then it's a cheaper, better option of money in a way, as long as you can get the establishment to feel like it doesn't mean that they're dead. So there needs to be a process that shifts us toward the advantages of that, without at the same time undermining in the institutional infrastructure of the planet. So I think probably there's going to be a kind of middle ground that emerges over time that is a version of that. And I don't know whether it's going to be Bitcoin at its roots that shifts and becomes more integrated into the institutional architecture of sort of multilateral financial frameworks around the world, or if it's going to be something new that kind of says, okay, so you want a Bitcoin-like thing? So we all came together, the establishment, and produced this thing that has all those advantages, and yet in a way that doesn't completely undermine our interest. So who knows? But I think that there is unquestionably advantages.
All right, so now that we got that one out of the way, let's shift into crude oil, because I know that's a real thing, and you traded it today, and you got short, took a little profit, and then got stopped out of this one. First and foremost, let me get your thoughts on that big draw that we had today. That was one of the bigger ones that I can recall. You seen any much larger than 12.8 million barrels?
No, I mean, I think we saw like a 13.3 last year, which was maybe the 10-year record, but yeah, it's certainly right there. Yeah.
And of course, another miss by the analysts, so good job there. But here we are now flirting with the $60 region. I'm guessing that the psychological level had at least a little bit to do with why you put on a short, but why don't you give us your thoughts?
So, yeah, I mean, I was looking for basically the highs that we saw toward the end of May to be overshot, and for both the 50 and the 200-day moving averages on the continuous contract to be overshot. And I actually was looking for a shy of 60, for to see really good data, to see it get very close to 60, and then to see kind of a little tiny pullback following the data, and then an attempt to get back up there again, and it ran into a big offer just below the level. So I can imagine that there's probably plenty of weak-handed longs coming in just looking to run the level. And so they're storing up ammo for it to move in the other direction, especially since the weak-handed shorts have got to be gone. After API, after this data point, I just don't think you have anybody in there who was sitting short into this, and having a real bearish thesis on the market, but not one that they're willing to carry infinitely as a value bet short, scaling against the market, weak-handed in other words. I don't think there's any way that money's still in this market. So if you're pressing for that, I mean, I don't know who's going to buy. The buyers probably are, commercial hedgers thinking, this is getting away from them, and we haven't even seen a real conflagration of what's going on with Iran. And if we see that too, if you need to secure jet fuel prices for American Airlines or something, you need to establish long interest in that market. You've got those buyers. There's no question about it. But traders, you're not going to get better data. You're never going to see better data than today. A drop in production and a beat on every product and crude, and a gargantuan beat on crude. You're never going to see better face value data, ever, all around, across the board. So that's in there. That's in the market now. We reacted to it. We didn't follow through. We didn't run the level. And I probably should still be short, but, I just went with the methodology that I generally use, and sometimes you get lucky and sometimes you don't.
Yeah, well, at least you were able to take a little bit off the table before that. You thinking about maybe getting back in? Is anything setting up for you?
It's not impossible. It's not the same risk-reward opportunity, but it is still a market dynamic that's interesting. So I'll just watch the pattern evolve.
All right. So I haven't personally gotten your thoughts on what you expect to come out of the G20 meeting. It's in focus, and you can tell based on some of the things that happened just this morning, where there was just somebody, or the market, holding on to the words of Steve Mnuchin, even just so slightly, and here we are. The algorithms just popped the market at 4 a.m. our time, and we've given that back, so we're trading basically right around the same levels as we were right when those comments hit the tape. So what's your overall takeaway? We've kind of settled back in. So we've reset. We've reset since then. Now, where do you think we're headed?
Well, I think it's the same situation that we've discussed before. There's no chance of a trade deal. So it's just a process of managing that. And I think that there's a chance, I suppose, in theory, of a trade deal maybe before year end, but only if this gets back on track toward something where there is genuine dialogue again, and it stops being just this kind of process of a very public attempt to one side shaming the other into some kind of folding that's political capital for the other side. I think that we could have had a deal if we had engaged in this process in a different way. Kept it kind of behind closed doors, and kept it out of the public spotlight rather than all over Twitter from both sides. And made it a multilateral move. I think that all of that presented the possibility of a resolution to this, but it didn't turn into that. So we have what we have here, which I think it presents no chance of an actual deal, and I think that both sides are going into it kind of clearing the space to allow them to continue to be very much hard line on rhetoric. I think that the White House has not shifted the narrative. I think one of the signs of a possible deal coming would have been if the White House had started to signal more about talking about how important the trade deficit is, how important it is to make sure that we get a good deal, and stop highlighting things like the IP transfers and the structural changes in the legal context in China. But they haven't. They've kept kind of with that, what I keep calling the Lighthizer version of the trade deal. They've kept that in focus, which means they're not doing a deal. Because I think at the same time, China's kept in focus its ability to, say we're not making those sorts of changes, but we're willing to talk about everything else. And so that's where we've been, and that's where we still are. And I think one of the interesting things that just kind of emerged is China has apparently spent the last few days talking to, they're doing the multilateral style. They've been talking to the EU, Germany, Britain, France, Italy, ahead of this, basically saying, hey guys, this was in the South China Morning Post, I guess. They've been saying, hey guys, if we don't get anything going with the United States, if they play hardball with us and we play hardball with them, is there anything that we can do together to kind of increase trade among partners and try to figure out how we can get a better deal going? And I think that that's exactly what they would do and want the United States to see them doing it to increase their leverage. That would be the way to increase their leverage, is that it's isolating the United States rather than isolating China. And that step, I think, shows you that, they're preparing to be able to take a hard negotiating line again, and both sides are kind of doing that same dance right now. And of course, you do that in front of any negotiation, and who knows what actually happens, who knows what cards people are actually holding. But I think that, there's very little positive that will probably come out of this, but I think the market kind of anticipates that.
Well, I don't know, Brett. It seems like they hold on to every single word, every single tweet, every single headline, and it's very fickle. Look what happened this morning.
Yeah, but the fact that we squeezed on it rather than went sideways on it shows you that it's not in the market. See what I'm saying?
Yeah.
Right, so I mean, there's suddenly a rush of buying if we get something like that, because people who own the market or don't own the market, they're not assuming that that is the base case scenario, is that we start to get on track for a serious deal over the near term. I don't think that that's the base case assumption that founds the current market pricing. I think that that would be a surprise, and I think that a lack of a trade deal, when we get bad versions of that headline, we don't tank, we kind of track sideways.
Well, I'll tell you what I think would have got a deal done. The elections
What's
being
that?
this year, not next year.
I don't know. I think that if we don't get a deal done this year, it's going to be after the election.
I thought they got real close, and of course my conspiracy theory brain even said on the airs that I would not be surprised if when we were getting really, really close to the deal, that there would have been some type of quote-unquote sabotage to the negotiations, because it's too far away. You know he wants a win ahead of the elections so that it can be... Oh, what's that?
Well, here's the... I don't know that. I think that he believes that... I think that he believes that if he makes the election about who's going to be able to be tough enough on China to get the best deal, then people are voting on the basis that if the deal's already done, then that doesn't matter anymore.
Well, I think no matter what happens, he's going to call it a win. So even if there are some
Yes,
concessions,
I agree with
it's
that.
going to be spun as a win. And the way he puts things out there, he can talk over anybody, and it's kind of that bully mentality of just talking over somebody and the point gets across, and then it becomes, he says it's a win, it must be a win. And that'll be... I don't think that works anymore. I think that people are too educated now about what constitutes a deal. I think he could have done that if he did it 6 months ago. I said this before. I think that's one of the main reasons why the deal can't get done now, is because they can no longer get away with the face-saving version of the deal. Even if they tell people it's a good deal, there's been too much focus, there's been too much education in the media, everywhere else. Very clearly, we know what constitutes a fold in the deal. And I think that it's been over Fox News, it's been over the Wall Street Journal, it's been in left-wing media. Everybody on both sides knows if you don't get these structural changes, it's not considered to be a successful deal. I think that he had the latitude to get a big trade deficit deal 6 months ago or further back and call it a win. And I think that that's one of the principal problems that continues to make this so difficult, is that now they no longer have the option because they won't be able to sell that as a win. And I really believe that. And I think that that makes it probably something that's intractable, at least over the near and intermediate term. Well, let me ask you this. Was the deal with Mexico a good deal?
I don't understand that question. Do you mean USMCA?
Yes.
Or do you mean the immigration thing? Okay.
Yeah, the USMCA. Is that considered a good deal?
So I think that people similarly haven't been able to digest a platform of simplistic content that allows them to understand the intricacies of that deal.
And that's what I think will happen with China too, because he comes out there and says it's a good deal. And the perception is, if you hear it, you know how that gets infiltrated into the minds of people. It's a good deal. Oh, it must be a good deal. It must be a good deal. It's just,
I think that it won't. I think it won't play, but we'll see.
Okay.
I don't think that they believe it would play at this point, which is one of the confounding elements. But we're going to find out.
But you're going to have people now paying attention who normally wouldn't be paying attention. You'll have the masses who are involved, who all of a sudden nobody's really... let's be fair. When I talk to some of the people out on the street who aren't associated with the market, teachers and just normal people who check their 401k 4 times a year, they're asking me what's going on in the market, and I'll say something about China, and they're like, oh, I didn't really even know there was anything going on with China. So it's not really playing out into the mainstream right now. So when the mainstream people start hearing, oh, we got a good deal, they're going to read, we got a good deal, this must be good. So no matter what happens, if there's a deal done ahead of the elections, it's going to be perceived by the masses as a good deal. And I think that's what's going to be the most important part.
We're going to have to disagree about that, I think. I think that used to be something that could happen. And I just believe that even people outside of financial markets, I mean, not everybody who watches Fox News is in financial markets. I think his base has been educated to believe that the tough on China means structural changes in terms of their laws and the taking away the IP transfers. I think that they have spent so much time kind of, pounding that in that that's the deal he can't get now. He can just get a big trade deficit deal. So I just don't think that the administration believes that they'd be able to get away with that move. But I could definitely be wrong. I'm not sure about that. That's where I am right now, and I think that they used to be able to get away with that. But yeah, so we can just kind of, agree to disagree on that point, and we'll track reality and circle back around to it.
You know what, Chart? In a verbal sparring match between me and you, if you're going to call it a draw, I'm calling it a win. There you go. See how easy that works?
People will believe it.
See how easy that works? If Chart Trader calls it a draw, I call it a win. All right.
There you go.
So, as far as any other markets that you want to hit on, is there any other trades up your sleeve that you're thinking about?
Well, I mean, the main trade that I've been thinking about, we could talk about, which is the gold trade.
All right.
Which we've been kind of, working on for, in a manner of speaking, the better part of a year, if you go back to where I initially bought it and got stopped out. But it is the gigantic ascending triangle breakout, and we have seen it. It happened. And we went with the GLD methodology to make sure we had exposure, and then I would say that I think that I executed really well on the futures piece of that, but also it's true, there was luck involved there to hit so perfectly on the moment when it suddenly turned into its own sort of parabolic move higher and extend up through, and the level that I picked as my outside target for that move was probably luck again, but it ended up being more or less perfectly the top so far. So I'm out of the futures piece that we put on right after the Fed, and still in the GLD half-size long position. And I just want to kind of circle back around to why that move happened. I think that there's a lot of, from what I've read, analysis that I've read, people see it as just kind of a strange technical phenomenon and a breakout through a level. And I don't think that really does justice to the situation. I really think that you have to keep in mind a couple of concepts that are really driving this. One, the value of gold is arbitrary. The price of gold is arbitrary. There's no way that somebody can make a fundamental argument about whether gold should be at $1 million an ounce or $100 an ounce. There's simply no tether to reality at all with the price of gold. It's relatively unique in that way. The only thing you can do is like cost of production measures. But there's, as far as making an economic argument, digging your heels in about when it's undervalued versus overvalued is an exercise in complete and utter absurdity. So that means that when certain technical momentum points happen, it's very difficult for people to stand in the way of it and feel like they can let it go way out of the money, knowing that it'll come back, believing that the weighing mechanism will eventually outlast the voting mechanism, because there is no weighing mechanism. So that's one of the factors, but at the same time, the bigger factor, I think, unquestionably, is that the hiking cycle, the tightening cycle for the Fed got us just to 2%, basically. I mean, that is, if you look over the long sweep of history, that's nothing. We have nothing. We have nothing in the way of amble before we're going to be smack dab into the effective lower bound again, in any kind of remotely significant economic downturn, any sort of contraction, any kind of recession. We're going to be smacking into zero on rates in no time. And at the same time, that's when your tax revenues are going to go down, and you're going to be sitting in a situation where we're going to have deficits because we can't get rid of any fiscal obligations, and tax revenues are going to go down at the same time. And we're already pacing toward, if you look at reality, about $1.2 million deficit, or $1 trillion deficit. And then, you can double that in a contraction. So the idea that we're going to be able to use traditional fiscal tools to battle it is also absurd. So it's absurd to think that the Fed is going to battle it with traditional monetary tools. It's absurd to think that the government's going to battle it with traditional fiscal tools. Now, whether or not that contraction happens is an open question. But we've gotten past the point where the yield curve, 3 months to 10 years, has been inverted for long enough to say that, every time this has happened in the last, big number of decades, it's always led to a recession within about a year. And, and it's never happened. So it's never happened without there being that recession. And no recession has happened in that time without that happening. It is perfectly one-to-one correlated when that sort of thing. Now, there may be other explanations for why that's happening, but as far as if you think of yourself as somebody who's managing money at, say, a family office with $2 billion under management and a 5% allocation to gold, and all of that situation presents itself. I think that what you're seeing now is those allocations going from 5% to 15%, because when we start to try to battle something, when and if it happens at some point, maybe 6 months from now we'll be in recession, maybe we won't. But if it happens, you know what's going to be accompanying that. What's going to be accompanying that is the advent of an applied version of modern monetary theory, where we're going to be using the printing press at the Fed to do things like infrastructure. And it's just going to be a whole new thing. And we don't know what the implications of that are. It's just making lots and lots of money out of thin air and using it for real things in the world. And I think that that may be a fine thing to do. It may not be a fine thing to do. I'm not even taking a position on that. But if you think of a probabilistic set of outcomes, a universe of outcome distribution, and you're managing a couple $1 billion, you're going to diversify your currency allocation and particularly fiat to non-fiat, and I think that's part of what's happening in Bitcoin, but I really don't think that's the main thing happening in Bitcoin. I think that certainly is what's happening in gold. And I think that it's just about managing probabilistic scenarios. I think that you start to get, the Fed is now in an easing cycle for the first time in a decade, and the yield curve has got massively inverted, and around the world it's just the percentage of relationships in the yield curve all around the world is at an extreme historical state of inversion everywhere. So it's, if you take that as a sign of some kind of economic contraction, some kind of cycle end that's on the way over the reasonable intermediate term, then this is the loud banging of the gong right now. And for people in that situation, I just think, given the tools that we're going to have, and given the likelihood that we're going to be put in a position to need to move to monetary policy creativity, and some of the ideas that are sitting out there on the sort of intellectual frontier, I think that's just a small shift, a small allocation shift. That when you go into a market, that gold is a small market, really it is, and when you go into that kind of, it's everybody crowding into a small room. If they just put a few bucks in there, you send it through the roof. So that was the original reason why we took the trade, was the idea that there was that risk, that vulnerability out there. And then I think, the curve inversion and then the Fed's change really sparked it to boom through the level, and now we're sitting up there. So I plan to stay with the GLD and let it trace out. And I think that 1,500 is a pretty reasonable possibility.
All right, so we still got another $100 of upside here in the futures. So, anybody, are you still in the futures trade, or are you out of that one yet?
I took that at 14.36, which is what I said right when I took the trade at the beginning, was what I wanted on it. So, yeah,
okay, so you're out of the futures, still in the GLD.
Exactly.
All right. Let's see, is there anything else we have left to cover on this one? I don't think I had anything on the agenda. Sitting tight in equities, I'm assuming. I think we're a little vulnerable.
I mean, we could be. It's really about whether or not you believe that the last Bank of America Merrill Lynch fund manager survey was correct. I think that's, and I'm trying to trace down possibility that there's some data that doesn't confirm that, but my large only options ratio did confirm it. So there's a couple of data points that suggest that large money managers are extraordinarily underexposed to this market, and I'm trying to figure out whether or not that's true. If that's true, it's tough to see how we could be too vulnerable unless we do just start to see a rapid deterioration. And we could see a rapid deterioration. I mean, June showed a rapid deterioration, but I think it's mostly fueled at this point by, and this could snowball into everything, but by inability to conduct new business investment and spending for companies that are trying to understand whether or not they need to completely restructure their logistics and supply chain management based on what's going on with the trade war and the uncertainty around that. I think that really took off with the Mexican threat. And so I think that's really what we've seen in some of these surveys in June. And I suppose if G20 just kind of further inflames that sense, then we could see it spiral into July and really cause a downturn that is going to be tough for the Fed to put back in place initially, and it snowballs into everything else. That's all possible. But it's also possible that we don't see that acceleration in this in these issues, and then we do see the Fed ease, and then we do see the some kind of track toward a possible trade deal before the end of the year that gets on track, and people start to get confidence in it. And I don't think the Fed's going to take back those rate cuts very quickly, because they will want to see inflation above 2% and sticky there for some period of time, I think, before they start to hike again, whether we get a trade deal or not. So you could have a situation where you get 50 basis points lower rates, you get back on track for a trade deal, and you got the market running at all-time highs with major money managers on the sidelines, which would, I think, be a recipe for a kind of blow-off bubble. So I think that, and this is kind of why I wrote that in my last chart book, I called it fork. And it's basically, you've got these extraordinarily divergent possibilities, and you can make plausible arguments in either case for really, a market crash in a bear market, or a big acceleration to the upside, and it's really tough to choose between the two. And I think that we're going to come to some points here over the next month or two where we start to get a greater sense of clarity about that. But I think a lot of it has to do with how people are exposed and whether or not they're as underexposed as it was suggested in that Bank of America research piece.
I'm curious, though, what is the incentive for those large fund managers to actually tell the truth in those surveys?
Yeah, that's a tough one. I agree. Now, could they coordinate perfectly so that there's a consistency across the group? I mean, do they all have a meeting ahead of responding to it? That's actually not impossible, I guess. Once you realize that the market is responding to something and you realize that there's a path to controlling that thing,
yes,
I suppose that it could be something that happens. But then there's a whole lot of people who know that, and then it's really tough to keep that information from becoming something that everybody starts to understand is happening. And maybe that's a multi-stage process, and maybe we're on the path to discrediting that research piece. I don't know. It could be gamed, but the idea of whether or not you are underweight or overweight equities, yeah, maybe they do. Maybe they do that. Maybe they all report it as underweight to try to spark people to come in and buy it from them. It's not impossible.
I mean,
but again, the Lobo ratio is hard data, and it confirms it. So that kind of reached a powerful extreme in early June, and that is clearinghouse data from options transactions, for very large options transactions. So that kind of showed the same picture. Whether or not it's correctly showing it, I don't know.
Yeah, I would be more inclined to believe the hard data or some type of independent research that shows, hey, we were able to get all the data from the same funds and look at their investment holdings and say, yes, indeed, they are underexposed. Their cash levels are at such and such levels. That proves, okay, yes, these large funds are underexposed, as opposed to them saying, because you got to remember, these guys are savvy individuals. They're always looking for an edge. Any edge they can get, they're going to try to take advantage of and exploit. The same way as we as traders do that on a smaller basis. And I just have trouble believing that they're going to be, truthfully honest, especially if there's no incentive for them to do so.
I think there is one incentive.
Oh, what's that?
They themselves want to know the data. And that it may be that at the end of the day you think, well, my one vote isn't really going to control that much of public perception, so I might as well say what's true. It's anonymous, and everybody's kind of thinking that way, because at the end of the day, they'd want to see where everybody else is positioned too. Then it's possible the game theory could stack in that direction, unless they have a degree of coordination. If they have a degree of coordination, then it could undermine the value of it. But if there's no coordination, they're all put in isolated rooms. It's kind of like a game theory thought experiment. If we put them all in separate rooms with no windows and no doors, and they can't coordinate in any way, and they're just asked the question, are you overweight or underweight equities? The incentive to deceive isn't very high, because there's a lot of fund managers in the survey, and they don't know what everybody else is doing, and so they may just be introducing randomness into the outcome. But the incentive to be honest about it, if they go with the idea that quite possibly other people are being honest too, then they get back the survey results, and the survey results have meaning then. So it might be that that's enough to kind of keep people, but if there's a degree of coordination, that could undermine that.
All right. Hey, where are you calling us from? The beach in Bermuda?
Yes.
Are you?
I can't believe you know. Did you put a tracker on my phone?
Yeah. Well, I can hear the wind just blowing through the mic there, man. You got a nice little setup.
It's nice here. Yeah.
All right, my man. Well, as always, thank you for your insight. Thank you for the trades and the education. And sure enough, if you have something up your sleeve later on today, don't be a stranger and jump on in.
You got it. Thanks, Jim.
All right. Thank you, Brett.
Yep. Take care.